you just need to spend $2.76 to buy $4.3 of cash. It's crazy. Hey guys, it's Eric from Hong Kong, based in Germany. I've been investing since I was 17 years old for almost 20 years. Today I have a question for you guys. What is the purpose of investing? Well, of course, it's to make money, right? And what is the number one rule for making money? Not losing money. So what if I tell you that there's a stock that has been risen for 300% in 1 year? The chances are it's going to go down a lot. Yes, I'm talking about BYD. Of course, I know the good things about BYD. For example, the government policy, Chinese government aims to have at least 20% of the new car sales by 2035 to be new energy vehicles, NEVs. Of course, BYD would be benefit from that. I'm also aware that Warren Buffett holds a long position in BYD. In fact, BYD is the 8th largest holding that Warren Buffett has, even higher than General Motors. However, do you know that the Chinese government is actually going to reduce 20% of the subsidy to NEVs in 2021? And do you know that BYD actually sells more traditional cars than NEVs? Yes, actually, only 44% of the cars produced by BYDs are categorized as NEV, new energy vehicles, including hybrids and electric vehicles. Also, BYD is actually not producing that many cars. In fact, it only produced 427,000 cars last year, including gasolines and NEVs. And do you know that how many passenger cars are being sold in China last year? 19.29 million cars. And we're only talking about passenger cars. There's still a long way to go for BYD to be a major player in China. And how about the PE ratio, price to earnings ratio? So the PE ratio for BYD in the middle of February 2021 was 200. Yes, 200. And how about now, around middle of March 2021, the PE is still up to 140. And if you look at S&P 500, the average is 15.9. Let alone that BYD's profits fluctuates a lot. I mean, unless you're talking about very long-term perspective, like 10 years, really waiting until 2035. I would say that in the medium term, short term, I'm a bit skeptical about investing in BYD. However, today my main theme is not to talk about how not to invest in BYD. Okay, let's go to the meat. Today I want to introduce you guys to an automaker in China that would have a very solid growth potential in terms of stock price. BAIC, short for Beijing Automotive Industry Holdings Company Limited. So BAIC is actually a state-owned company. It has two joint ventures, one with Mercedes-Benz and the other one with Hyundai, which is the Korean car manufacturer. On top of that, they have their own brands. Saab, which is the higher tier level brand which they bought from Sweden. And then they have Beijing, which is in the middle tier. And then they have Weiwang, which is like a lower end brand. They also have a subsidiary called BAIC, Blue Park New Energy. It was the first company listed in mainland China A-share that was focused on new energy vehicles. And the BAIC we are talking about here is the holding company, which is listed in Hong Kong. You can also buy the share in Frankfurt. So Daimler, the mother company of Mercedes-Benz, owns 30% of the share for the part in Hong Kong. Well, the full year result of 2020 is not known yet. However, we have the number from Q1 to Q3 already. So according to those figures, the profits went down 56% to 1.7 billion RMB. Well, that's why we have a bargain now. Well, the revenue remained more or less the same, down 3% to 134.4 billion RMB. So the revenue side is not too bad, but the profit side is really the big reason why we have a crash of stock price and why we have the opportunity now to buy at a low price. So it is estimated that in 2020, it should reach a profit of around 2.8 billion RMB, which is not bad. I mean, of course, it's down 31% compared to 2019, but it's not horrific. So it is expected that in 2021, the profit will go up 15%. This will translate into a price to earnings ratio of roughly 5.6, which is 55% lower than the average in the past 6 years. However, the most interesting part of BAIC is the NAV, the net asset value. The NAV is roughly equal to 8.03 Hong Kong dollars per share. And do you know how much is the stock price at the moment? 2.76 as of 17th of March 2021. Yes, this is a big difference. So the PB ratio, the price to book ratio, is 0.34, which is extremely low. So this is meaning that you are spending $0.34 buying assets that worth $1. But even more interestingly is that if you look at the cash they have, the cash per share is roughly equal to 4.3 Hong Kong dollars. So that means that you just need to spend $2.76 to buy $4.3 of cash. And if you look at the dividend, the yield in 2019 is roughly 6.85%, which is already quite high. We expect that to roughly stay the same this year. And next year, we will expect it to go up to 7.8%, which is a very high value. Because comparing, if you look at S&P 500, the average dividend yield is around 4.31%. So you can see how high the yield is. And there are also other factors to take into consideration. One of the factors is the potential that they will go to list on A-share, which is in mainland China. If they do so, this will follow the footsteps of Dongfeng and also Geely. So Geely is the owner of Volvo and Polestar and among other brands. So these two automakers were listed also in A-share, and then their price to book ratio goes up to 1.35. So if you compare with the PB ratio of BAIC now, which is 0.34, you can imagine how big the difference it is and how big the potential the price could go up. Also, BAIC is planning to announce a new model of electric vehicle in April during the Shanghai Auto Show. This is called, well, very difficult name, need to read the script, ARC Fox ASHBT. The H stands for Huawei. Yes, Huawei. So they're actually collaborating with Huawei using their 5G chips. This car will be amazing because it's going to use 5G capability from Huawei. It will have 12 cameras to look all around, and it will be level 3 autonomous driving capable. A word of caution, of course, is not everything, bright and nice. There's a reason, of course, why the stock price went down. For example, because of the profit plunge. They're under fierce competition. For example, BAIC Hyundai is struggling to make higher sales. And the overall BAIC is heavily reliant on the joint venture with Mercedes-Benz, which they own 49% of the shares. That's the reason it's so cheap. But this also gives us an opportunity to invest when the PB ratio is so low, especially when the cash is so high. So in summary, despite the challenges faced by BAIC, for example, with the joint venture with Hyundai or with sales in general, but we see that there's great opportunity to invest. Why? Because of the PB ratio. The NAV is around 8 Hong Kong dollars per share. And out of that, $4.3 per share are actually cash. And the stock price now, $2.76. So you can see the PB ratio is only as low as 0.34. In addition, if you consider that they will follow the footsteps of Dongfeng and Geely to go back to list in A-share, the PB ratio would go from 0.34 up to 1.35, which we can see the stock price could go up a lot. And of course, we're expecting them launch a new electric vehicle model in April, together with Huawei using their 5G technology with L3 autonomous driving capability. So these are all really interesting. And Morningstar's target price is 5.2 Hong Kong dollars, which is almost double from the price we have now. So what do you think about this automaker? Do you think there is a better investment than BYD in the coming 1 year? Let me know in the comments below. If you like this video, like, share, and subscribe now. It would be a great motivation for us to make more in-depth analysis about other Chinese stocks.